Broadcasting from Orchard Park, New York,
and Boca Raton, Florida,
it's the Freight 360 podcast. From freight broker sales tips to sports talk, this podcast is all about helping you grow as a freight broker. We're your hosts, Nate Cross
and Benjamin Kowalski.
Let's talk freight. Welcome back for another episode of the Freight 360 podcast. We have a special one today. We've got some of our friends from DAT and Outgo, which we'll talk about here in just a little bit. Big news there. But if you are brand new, you've got a whole library of content, episodes, YouTube videos, blogs, all on our website at freight360.net, or just go right to YouTube and look us up there. You'll also find a bunch of downloadable products, some little helper guides, dispatch checklists, produce calendar, some model contracts. You got the Freight Broker Basics course if you're looking for training material for you or your team. So make sure to check that out. Share it with your friends. Do the whole like, subscribe, comment on YouTube. We've gotten some interesting comments on the YouTubes lately, so send them our way. Whether they're love or hate, it helps the algorithm, so we appreciate it. Ben, what's happening in Florida today, man? Anything good?
Nothing too terribly interesting. Nice long weekend for Memorial Day. Watched a little bit of the Indy 500. Didn't watch the end of it. Watched actually quite a bit of the French Open, and I've never actually watched that much tennis, but my daughter and I starting to play this year. I watched quite a bit of it. It was actually pretty enjoyable.
Nice. Well, hey, we've got Marcus from Outgo joining us and Ken from DAT, who's been on numerous times. So, Ken, you've introduced yourself enough times, and you've got quite the X following, so people know you. But Marcus, we haven't had you on the show before, so if you don't mind, just real quick, tell us, the audience, who you are, what you do, and we'll get into the whole story about this big news in today's episode. But just a real quick background.
Awesome. Well, great to be here. Thank you, Nate. Thanks, Ben. Awesome to be here. So I'm a CEO and co-founder of Outgo. Outgo is a fintech and factoring company in the freight space. And so we were just acquired by DAT just about 7 days ago, a week and a half. So we started Outgo 5 years ago to transform how carriers get paid. They care about finding work and getting paid, and we saw an opportunity to really transform the back office suite and financial services to help them run their business more profitably and efficiently.
Awesome. We'll appreciate it. We're going to get into that exciting news and the whole story behind that in a little bit here. Ken, what's the latest with you, man? First of all, congrats to the Ohio State University, big dub earlier this year.
Yeah, it was pretty awesome. We got to go to the Tennessee game. I took my boy to the Tennessee night game and froze our butts off, but probably the best sporting event I've ever been to. Previously, that would have been when we beat the Patriots as the Steeler fan in the AFC Championship game.
There you go.
But this was a different level, being in a college stadium at night in the week before Christmas.
Nice. Well, on the topic of sports, we'll just hit on it real quick. I know we're not in NFL season yet, but as a Buffalo Bills fan, it's funny. So they're doing a Hallmark movie about the Bills. It's coming out this Christmas. So I think they did it with the Chiefs last year, but they filmed it this past weekend. So I think it was like the Saturday before Memorial Day, or Friday and Saturday. So they took like 2,000 fans as extras, packed them in a couple of the sections at Highmark Stadium in Orchard Park, and they had to make it look like it's a late December game in the snow. So like everyone's dressed up in like winter gear and everything. But ironically, it happened to be like 40 degrees and cloudy in Buffalo in late May. So I guess it worked out in their favor. But yeah, you can see the Bill. I think there's like 5 players from the Bills they'll be featured in the movie, but it's some Hallmark love story. So in other news in Buffalo sports, if you're a lacrosse fan, my Buffalo Bandits just won their, I think, 3rd straight national championship this past weekend. So way to go, Bandits. Indoor lacrosse is like wildly entertaining to go to. If you don't follow the sport, you just go and there's pumping music the whole time and playing lacrosse. So yeah.
EA released the cover athletes for the NCAA game today.
Ooh, who do we got?
Jeremiah Smith, for the Ohio State University, and Ryan Williams from Alabama.
Nice. I did not catch that one. When's the
Ken, what do you
game
think
come out?
about?
I don't know. I haven't. I might pick up a copy just to put on the wall because I think the extended version has Ryan Day and Caleb Williams on too. But I'm assuming it releases in the next month or two.
Yeah, let's see. Oh, yeah, here it is. EA College Sports Football 26. Ben, what do we got? Anything like golf or any other good sport? You said the Indy 500, right?
Indy 500, I didn't see the end, and I don't actually know who finished. And I was watching some of the French Open, but that's not over, I don't think, until like next weekend. It's like,
What is that? Tennis?
yeah, like they
Oh.
have
That's on clay.
Oh.
tennis on clay. So it's like Roland Garros is the one, the French Open, then they have the Australian Open, Wimbledon, and then US Open, like the four big tournaments.
Gotcha.
It was pretty cool though, because Nadal, I guess retired. This is his first year not playing, and he won 14 of them there, which is like insane. I mean, like I think the next person had won like two or three, and he's won there 14 times over his career. So like,
Monster on
like
clay.
Wow.
insane. I was curious, Ken, what do you think? I think Aaron Rodgers is going to end up with the Steelers.
I mean, I hope not. I think they should give Will Howard a chance.
You and
And,
everybody
I
in
hope so.
Pittsburgh.
I hope so.
You give Will Howard a chance, and then if he doesn't pan out, you draft Arch Manning or Nussmeier out of LSU. So the problem with Steelers fans, I belong to two of the most entitled fan bases in the world because Steelers fans, like, they need to just go like 2-15 one year and get a
You
quarterback.
guys are
like
stuck in purgatory right now. You're
yeah,
like
this
you're
era
making
of like
playoffs, but not getting
yeah,
draft picks.
Tomlin going 9-8 and then getting just obliterated by the Chiefs in the first round of the playoffs is like not, I think, like the standard.
But you have
Standard's the
DK
standard,
Metcalf
Ken.
now. You have
But
DK
he's the
Metcalf
only
We
now.
do.
Yeah,
Yeah.
he's
He's
the
gonna
only
throw the ball
receiver
to
we
him.
have on the roster.
Got rid of Pickens.
They got rid
So
Yeah.
of Pickens. They're trying to get Chris Olave, which, then you'd have Olave, Jack Sawyer, and Will Howard. I don't know. I mean, they'll probably still be second in the division, but I think the prospects are better for the Buckeyes this year than the Steelers. That's my bold prediction on today's show.
It's like every year.
Well, yeah. I mean,
These-
there's a few years where the
Really?
Steelers, remember the Steelers were great in my lifetime. The Steelers were great during like the middle of the Tressel era, where the Buckeyes were kind of middling about a little bit.
Yeah.
But
Interesting. Well, we'll see. It's I was funny. I was talking about it with my wife earlier. Like we're already planning like when to take our kids to like Kids Day for preseason, and I'm like, man, it's like only a little over 2 months away from being back in the stadium. So
it'll be here before we know it.
it will. I like to try and enjoy the few summer months that we get. I'm sure Ken, you're in the same boat. You're in Ohio, right? Are you in Akron?
Yeah. I am. This is the worst. It's been bad weather since the day after Thanksgiving. I'm not kidding. Like it's been the worst stretch of weather in my adult life.
I feel I could probably say we're on the same page in Buffalo because it has been, we had like a couple of like teaser warm summer feeling days, and then it's been like consistently like a lot of rain, like a ton of rain,
Yeah.
and like just not warm at all.
Welcome to
hey.
the Pacific Northwest. That's the standard
normal
MO
for you
out
guys.
here. It's like
You could tell. I got a little sun yesterday. It was the first nice day we feel like we've had, and we walked in a Memorial Day parade, and now it's supposed to rain for the next 6 days. So,
Ugh,
yay us.
yucks.
it's supposed to be 86 here tomorrow. So
Rub it in.
we're like swapping weather patterns.
All right, so Ken, give us the latest on the market. I want to. You and Ben were having a good little dialogue off air beforehand, but before we talk Outgo, I want to get your take on where have you seen things. We've like historically done like an annual show with you where we talk about like either how the year went or the upcoming year will be or would expect to be. We didn't do one, I think, in like 18 months. So I'm curious,
Thank
like.
God.
What's the state of the market overall? I know we get a lot of weekly stuff from Dean and from you guys. Big picture though, like we're just about mid 2025. I don't think anybody thought we'd be where we are right now still. But what can you say? Where have things gone? Where do you see them going? Like on the biggest level possible.
Yeah, I mean it's just incredibly stuck, right? I mean it's as indicative of equilibrium as you could possibly get. Like I don't think the market's trending down. It's certainly not trending up. It's just stuck. So we had our executive symposium in Phoenix last week. 80 or so top execs from probably let's call it the top 50, top 60 brokerages. Very similar sentiment. So, maybe we're getting 2 to 3% on RFPs if they're lucky, like very lucky, but the spot market is just absolutely holding steady at where it's been largely for 2 years now.
You've seen the headlines. Freight fraud isn't going anywhere. But if you're a QuickScope customer, you're not seeing it in your business. QuickScope is a cutting-edge, load-level visibility tool that stops fraud before it starts, right where it happens. Inside the transaction, no noise, just results. With unlimited usage and by far the most cost-effective product on the market, QuickScope delivers real value without the bloated price tag or platform confusion. And here's the kicker. Version 2 of QuickScope drops this summer, packed with powerful new features and AI integrations that'll make your visibility game even stronger. Sign up today and you'll be locked in at today's pricing when version 2 goes live. Stop chasing fraud. Start stopping it. Visit quickscope.com. That's QUIKSKOPE and learn more.
Road check week, I think everyone, especially the loudest voices out there on social media, thought 200,000 drivers were going to come off the road that don't speak English. That wasn't the case. It was just like every other road check week. I made a joke this morning, right? That like all of a sudden these 200,000 mysterious drivers, they spent road check week and Memorial Day learning English, and now they're proficient again because the market's come right back to where it was. Um, and it's just, that's what happens when a market's at equilibrium. Just think of like it's buoyancy, right? When the market's over capacity, it's like a dead weight in the water. And when it's way under capacity, it's floating above the water. Right now, we're just kind of riding the waves. And if we get tropical weather or a polar vortex or road check week, the market responds and then immediately snaps back to where it was.
So I
Yeah,
have
like
one
I just
question
pulled
about
up.
that. So
What?
from the macro perspective, right, it seemed like the past 2 years, right, we're on like the end of of a 4 year basically period where the market hasn't really changed, right, post COVID. But like it
Yeah, let's call it
seemed,
3.
Three. I would say
yeah,
like
okay.
spring of 22, right?
Yeah, late.
So
Yeah, yeah.
so the thing that I'd seen again anecdotally is that like any of those things like road checks, storms, or anything that were even regionally affecting capacity, like that normally did pre-COVID, seem to start happening more now than they had. And again, is that indicative of enough carriers leaving the market that you're starting to see these things affect the market more when they do happen? Because like the Savannah market got super tight last week to where like I know they said like the tender rejections went up to like 28%, but like again, anecdotally, people are paying like literally two, three times the rate to get something moved out of there. I just don't remember that happening the last 2 years, right? Of this period where any of these things affected the market enough to see the lane rates ever move that much again. Is that showing that we're getting closer to at least the excess capacity shutting the market, do you think? Or do you think it's just a bunch of things converging at the same time?
I think like so I posted about Savannah last week. I mean, it just happened to be that they were caught flat-footed without enough trucks and the marginal units, right? The last couple of loads moving in the last couple of trucks or what everyone talks about, right? I mean,
Yeah.
it's hardly ever. I don't think the first load out of Savannah last week raised an eyebrow. I don't think the middle 50% of loads raised an eyebrow. I just think like on the margin, a lot of trucks have come out of the market. They're not continuing to come out though, right? That's what I think is really interesting. Like the last 2 months, we net added capacity. Now April always adds capacity, right? So I really think for as much as being made about what's happening right now, it really isn't that much different than 2019 rounding into 2020. Had COVID not happened in 2020, and we didn't see a market recovery, we would have had the exact same conversations of how could we possibly repeat a year like 2019 again. I was still in the industry in 19, and it was absolutely awful. Like I came to DAT in the middle of December, and it was like a Christmas present to get out of like having to worry about profit margins and sending hourly folks home for 26-hour or 36-hour work weeks instead of 40. Like that was as bad as I could ever remember it being. And I don't know, do people really like to sit around and compare like the worst times they've ever experienced?
Fair
How much
point.
does it actually matter if 2024 in the rear view was worse than 2019? Not at all. Um, and so like I do think it's just too much volatility with the trade policies. That's what this all comes down to. I think had we not had an absolute coronary in the trade policy department, we probably would be up 7 to 10% year over year right now, just kind of plodding along, anticipating some Trump tax cuts with a GOP House, Senate, and presidency, as opposed to like literally just continuing to hit our foot with a hammer over and over and over and over and over again. And that's not a political statement. Like, I don't care who you voted
No,
for or who you support. It's just like, this is crazy, whether you're a Democrat or Republican, an alien, or you've never even, you've never spent a day in global trade. This is just crazy what's happening.
Yeah, it is weird. It's so my assistant started working for me in May of 2022, and like I remember telling him, I'm like, yeah, I'm like, as we got towards the end of 2022, I was like, yeah, you'll probably see like the market shift into next year. And then we have a conversation like a year in, 2 years in, and now like 3 years in, he's like, man, he's like, where's this like this turn that everyone's been talking about? And then like I looked back at the other day, I like looked back at like just national spot rates across like the three, your dry van, your van, reefer, and flat. And I'm like, they've just been like flat for years now. So
I've never seen anything like it. I mean, honestly, prior to the last 6 months, I would have said this was not abnormal, right? Because like the front end of the cycle was not normal. You know what I mean? Like, it's like, I hate to use the roller coaster analogy, but it's like going up the hill and then being shocked when coming down was fast, and going up a bigger hill meant you shot. But the fact that it's stuck there is, I think, what's concerning even the most mild mannered. Because I don't like freight sensationalism. I think you know that about me. Um, it's just that's what's most vexing about the current situation.
And
It's just
the
how stuck
interesting,
things are.
and that was the thing that like we talked with Dean about. I think he was on like December. We were, end of last year somewhere, give or take, and we were talking about like, there's two. It's the tale of two carriers coming out of this, right? You have the carriers that paid a lot for their trucks that have to get break even at 215 a mile, right? But also got a lot of COVID money, right? Or banked a lot of money and saved a bunch and had enough saved for the rainy day. And then you have the other side of the market where carriers bought really cheap trucks and were able to bank money, right, and also borrow some money coming out of this, where he's like, the operational cost, there's like two very different numbers where like some carriers are able to break even at like even $1.90, $1.95. Then you have this whole other section that is over $2 a mile. And he said the interesting thing is like none of them, from what he was saying, like, do you feel like has enough money in these coffers still after 3 years for a rebuild on any of these trucks? And he's like, now we're reaching the mileage point and time point at which all of these trucks are going to need rebuilds. So even if you got a cheaper truck, you're going to have to put in, and he knew the number off the top of his head. I can't remember what the rebuild number was, but it was significant. And he's like, so if you don't have that in savings and you need a rebuild, you can't just keep driving. They're going to have to leave. And there was his sentiment was, somewhere around the midpoint of this year, those carriers are going to have to exit the market pretty quickly because like they just don't have the money, can't borrow more money because the market isn't good enough. Their balance sheets don't look good enough. The income statement doesn't. How are you going to get a rebuild? You're just going to leave. And he was expecting a big mass exodus in the carrier market. And like, you just kind of haven't seen it. And then it's like on DOT week, Leffler was talking about like, it was some like 4% of carriers like didn't have any CDL whatsoever. And it's like,
not licensed.
Are people just driving just with no CDL and just completely defunct equipment that aren't anywhere close to the service standards that is keeping the rates up? Because like economically speaking, as big of a hill as it was, they still should be exiting the market at some point, right? To bring that capacity back up. The equilibrium back up.
I mean, the FMCSA is like the Cleveland Browns of government associations, right? Like they are the absolute worst, right? You got a guy who's like only claim to fame is being on road rules, making a big deal about the English language proficiency thing. And again, 20% of commercial motor vehicles are unsafe at any speed. And then you've got, again, large percentages of folks who are getting out of service violations. I don't even know. I was reading this tweet from Fuller, which actually blew me away, which was like, they can't even be taken out of service because they're technically not commercial motor carriers. Like they're not even licensed to operate. So like, there's actually no
because they never were authorized to.
Yeah, what do you think they're going to do? They're just going to go right down the road and hop into another truck. And that's what I do. I think it's changing a little bit. Like it's a little bit of a moving target. But at the end of the day, over the short term, which short term has changed in its definition a little bit, market rates are bound by like the variable cost to operate. So literally the rolling costs going down the road. Over the longer term, it will bake in the rebuilds and changing insurance costs and reinvestment and all that. The problem becomes like we're all going to be very disappointed if this true recovery is a supply driven recovery, because those are always very tepid and unexciting. And that's when you start to see a lot of turnover at the top, like large brokers consolidating or going out of business. Think like Celadon a few years ago. Um, what you want to see
You want
is,
demand driven, right? Like,
yeah, you want to see like this would be, maybe I'm going to speak it into existence, but this is where you're primed for a demand event to shock the market, like ELDs, right? You were coming off a really, really sluggish 16, capacity had completely came out of the market, and then you had Harvey and Irma, the Trump tax cuts, and then boom, ELDs. And it was like a demand, COVID was a demand driven, um, again, on the heels of a very weak capacity market. If we're going to rely on the upward pressure on rates being purely um, supply driven, we're going to be in for a pretty, like, that caps out probably at 10 to 12% if we're lucky, unfortunately.
Maybe we'll get lucky
interesting.
and it'll be both.
But these carriers won't have to
Can
go out
only
of
hope.
business because they have a market leading factoring solution now that they can acquire through DAT to manage their back office at well below their competitors from a rate perspective.
It's a
What
hell of a
a
segue.
fantastic segue. Yeah. So obviously big news. Marcus, we've got you with us today. I guess paint us a picture. What's the big news? What happened? I'm sure Ben and I will have lots of questions and whatnot, but give us the rundown.
Yeah, so fresh off the announcement on the 15th, DAT acquired Outgo. Outgo is a fintech and factoring company that serves carriers. And like I said, we started 5 years ago. Carriers care about finding work and getting paid, and not a lot of innovation has happened around helping them manage their back office and getting paid. And so Outgo built a software platform connected to a bank account that it's like hiring our software to run your AR department. And so it's reducing the costs, increasing the flexibility and speed that carriers need to run 24/7, 365. And so I think it's about putting them back in control of what it means to run a profitable business as much as we possibly can, and with the obviously the services we offer, and putting that under the DAT suite. So
I got a question on that. So, because I wasn't very familiar with Outgo previous to this, so I've been trying to learn about it. I'm sure this is probably good for anyone listening too. So, before DAT's acquisition of Outgo, how was one of your customers using the service? So, like if I'm a small trucking company, for example, or we'll say I'm the average size trucking company, which is arguably small. How are they using Outgo?
yeah.
So what does that actually look like on a actual like load level or whatnot? How do they use
Yeah. Yeah, absolutely. Okay, so when you're a carrier, you have back office services that you hire to run your business. So you might have a factoring company, you get a bank, and then you may have a separate way to make payments. And so we looked at that back office life cycle from you get you got your rate con, you deliver the load, you get a BOL, you got to send that in to invoice the broker, and
Yep.
then it starts a payment clock. Typically, it's around 30 days, and then that money lands in your bank account, and then you make payments, et cetera. But obviously, we know that like running a trucking company, there's high operating expenses. You got fuel, you got payroll, you got insurance, you got your equipment costs, paying for your lease or your truck payment. So a lot of carriers turn to factoring companies. And those factoring companies are very traditional finance companies. They use off-the-shelf software, and they hire a lot of people to run the invoicing process in the back office. And we, as technologists, so I've been in technology for 25 years. We look at technology as leverage and automation, and really kind of use technology to transform how business is done. And so we took that sort of back office process. Think of it as like your AR department,
Yeah.
and we built software around that process to automate the load lifecycle, and then we connected it directly with a bank account. Think of it as like I guess most corner banks, they only offer treasury services for most small businesses, particularly trucking companies, because they don't know how to underwrite them, and like they don't offer them credit.
In freight, time is money, and efficiency is key. That's where Levity comes in. Imagine automating your email operations to do more with less effort. Levity connects directly to your inboxes, extracting vital information from emails and attachments in real time. It seamlessly integrates with your TMS, empowering you to quote faster, build loads more efficiently, and book more freight in less time. Whether it's incoming emails from shippers or carriers, Levity's got you covered. It understands any language, any format, and even interprets non-standard formatting. Visit levity.ai today to sign up and get started.
Tired of struggling to find accurate rates and the right carriers for your freight? With DAT1, you can access more than 500 million posted loads and trucks every year. That's 3 times more capacity than any other load board. Plus, their integrated freight management system makes it easy to cover loads 24/7. They have the most trusted network of carriers, brokers, and shippers in the country. You'll get real-time rates on every lane so you know exactly how much a shipment will cost before you commit to it. Plus, you get instant access to top bids from qualified carriers around the country. Get 10% off your first year of DAT1 when you visit the link in the show notes.
So you have your bank and then your factoring company, and your factoring company sends money to your bank, and then you make payments. Well, we combine that all into one. So it's an all-in-one business suite that manages your back office. And so we turn your future, payments, your receivables, into almost like an overdraft line that sits right behind your bank account. That as you OPEX your business, as you spend to cover fuel, maintenance, payroll, we factor on demand out of the receivables due to you by brokers you work with. And so we built the first in the industry fractional factoring product that actually spends as you spend out of your bank account, it takes money out of your invoices, and you only factor what you need to fund your business.
Gotcha. So I'm going to break it down Barney style and tell me if I'm regurgitating this properly. So traditionally, right, like a trucking company, let's say they're not factoring, they're doing everything themselves, right? They are paying, either they're wearing the hat themselves to do this, which takes up valuable time to produce revenue, or they're going to be paying somebody to handle their AR department, like you mentioned. So that's, like you said, getting the signed bill lading or POD,
That's right.
merging it with a rate confirmation from a broker, creating an invoice, sending it,
Yep.
hoping they send it to the right person, and then then they wait 30 days. They get a check in the mail. They have to walk to the bank, deposit it. They have access to those funds, right? That's the traditional way. Factoring says, hey, well, you just send us your paperwork, and we can, we can basically pay you a percentage of that at a fee, and then pay you the rest of it once we collect on it. And there's a whole, we've had lots of discussions on factoring, Ben, so we don't have to take that down too deeply. But so then with Outgo, you take all of that and you try to use, it sounds like, software and automation to shorten the distance between all those connecting dots and reduce the manual lift to actually do those tasks. Is that, like, in a nutshell?
You got it. We it's like your AR department meets your bank account, and that's right. So like a traditional factoring company, they do your AR behind the scenes, but they give you cash immediately at a discount, and then they collect on the receivable because they own it.
Yep.
And they send all that money to your corner bank account that you spend as you go. Outgo's different in that you run all your documents. So like we can instantly process your documents and send out about 95% of our invoices are sent within 4 hours of document submission. So that starts your payment clock right away. And then you can access capital money from that load anywhere in the payment cycle based on your factoring fee. So it's a fully integrated AR product meets capital product, and it's like super flexible because you can only you only get to use what you need, and you don't have to use what you don't need. You don't have to access, and so you can save money.
I was gonna say, because some
So
factoring companies will say like, "Hey, 100% of your stuff needs to
That's right.
exclusively come through us." Yeah.
That's right. That's right.
So the two things, and I have two things that I kind of wanted to talk about. Is one is what Nate just said, right? Is I used to see this when we first got in the industry. I remember going to TQL because I had some carriers. And I'm like, we're doing all of their business, but yet we can't quick pay them because their factoring company, right? They're basically getting a quick pay from the factoring company. And I remember running the numbers on just one carrier, and I'm like, they're exclusive, meaning like they've got to put every invoice they ever do
Right.
with their factoring company, and it basically becomes like it's like a revolving prison because like they can't get out because they're
Yeah.
always spending right what is coming in, and they're always owed, the factoring company's always owed money behind them. And I
Yeah.
looked at it, I'm like, they're paying their factoring company with some like 100 grand a month on just the loads we ran them. And I'm like, we could make even 80 of that grand, they would save 40, but we would have had to cut a check to the factoring company for like $250,000 or $500,000 to buy them out of the factoring relationship to be
Yeah.
able to do business with them directly. And it's
Yeah.
just like, it's like you end up with a credit card as a kid and you keep making minimum payments. You never get out of that debt. It's the same thing with a carrier.
Totally. You got it exactly right. And I think we saw that. So my background is I've been in tech for 20 years. I've built software. I started Microsoft and then started companies about 8 years later. And we worked at a company called Axon. We sold, my co-founder and I sold our first company. We want to build software that's mission specific, that is used by people to change their lives. We served law enforcement for 5 years by building them a suite of services around body camera and digital evidence collection. And so my co-founders then went to Convoy. I was at Uber for 3 years, and we got back together and we said, hey, we have this mission of focusing, and we think carriers are really underserved when it comes to managing their payments in their back office. And we just saw this hamster wheel that factoring
Yep.
was, that you once you get off on that thing, you can never get off of
Can't
it.
get out.
And listen, some people need it. Some carriers need the cash
Yeah.
flow. You're an early one truck carrier. You're going to have higher operating expense needs that you're going to use up maybe all of the receivables that you run on a weekly basis, but you can never get off of it. And I think that's why we wanted to kind of flip it on its ear and build software and a banking platform that said, hey, listen, run your receivables through this platform, run all your loads, and that you can adaptively access the cash flow you need. And if you don't need it, that's cool. We'll charge you a floor rate and
But I
it'll
want to point that
operate more
out.
flexibly. And it's not a one-way door where you
And I wanted you to just stop there because what for the audience, what I want everyone to understand what that means is if I don't need the money, I'm not paying interest just to have it sit in my bank account. That's the way a traditional factoring company is. Like if you need it, you got to take all of it and you're already paying interest and fees on that. And what Marcus
yeah,
is saying is if I only take what I need out of my invoices, I'm not paying additional money to have cash sit in my bank account I don't need for my expenses. And I'm flexible as in when and how I actually need to take it. Meaning that money's cheaper, actually. Like you earned it and you get to keep more of it, right?
that's right. That's right. And I think like we can get into the details, but like we have your top line rate and then your floor rate. And like you can adaptively access the cash you need, which will lower your effective rate
Mm-hmm.
as you run your business. And again, like if you need it, if you're running one truck and you need all your cash from all your loads, you could take it. But then let's say you don't need, you grow and you're building up your business, you can adapt how much you take in the future because again, the service we built, it sits right behind your bank account like an overdraft line that adaptively, like as you spend out of your bank account, we cash flow your needs, whether it's payroll or fuel or maintenance.
So how does the second question is like the money that goes out to expenses, right? Like in my head, I'm picturing similar to like PayPal in a sense that like they kind of sit together, but they don't sit together in a sense that like, so if I'm paying a bill as a carrier, is that coming out of Outgo or is that coming out of my bank account or am I moving all of my money expenses into the Outgo system to pay them directly out of your system?
Yeah, so we're very flexible. So with Outgo, you get a full FDIC insured checking account.
Okay, I was gonna
In the
say,
ta-
so there's
in
actually
the
a bank component to this,
That's
right?
right.
Okay.
Yep. We have a partner bank, and you register your business entity with our banking partner, and it's the tax ID number of the business. So it's your bank account. It's all yours. It's got a routing number, an account number, and you can spend money out of that account just like you could a traditional corner bank. Or you could move money from that account, your Outgo accounts, to whatever
To
corner
another.
bank you're using. But I think the idea is that we have a debit card that is attached to that account, and this is where it's really the differentiator is that you can submit a load, and we have a 4-hour funding guarantee for approved brokerages where that money can become cash in 4 hours and spendable out of your bank account on your debit card. Or we have other like Visa direct payment rails you can move money around. And so you can pay whatever you need, whether it's you pay off your fuel card, your insurance, you can pay it directly out of that account.
So like if
See,
let's say I'm running a small trucking or any trucking company for that matter, um, instead of having to go to a broker and say, "Hey, can you send me a fuel advance?" Right, my driver can just go to the ATM, pull money out. Right.
We
From
we have a
previous
debit
loads
card
that
that's
are on their balance sheet, essentially on their balance sheet, right?
assuming they have either money in their bank account or they have receivables they haven't factored. They can pull money directly out of an ATM if they need cash,
So
or
then,
they could use their Outgo Visa debit card at point of sale
yeah,
to factor on demand.
okay.
So like it's like think of it as like Outgo has a bank account and there's a debit card attached to it. It's a Visa, sponsored debit card. You swipe wherever you swipe. We're in the authorization flow of that like swipe, and we can factor on demand for you.
Interesting.
so I want to point out too, for anyone out there that's like thinking about this or trying to understand how and what this affects, right? Like my meeting after this, okay, is literally with the factoring company to go through our integration with our TMS, meaning like all of the invoices and BOLs that go over through, it is not, and everything is fully integrated, and it is not, I would say, straightforward to be able to see the difference between what you send into the factoring company and the cash that actually comes out of the factoring company. And I've been doing this for 15 years, and like we are going to go through this line by line to go and look and see exactly how this happens. And I think for a carrier out there, like the ability to have this all sit in one place is not a small thing. Like knowing that you're putting your invoices in and your BOLs and being able to see it all there and see what's hitting your bank account in one place is a very big difference from the way all of these operate now.
So Ben, this is exactly why we built the software the way we did, is because we felt that there wasn't transparency
Yeah,
in within
there
the
isn't.
space to see exactly where your fees were going. And we custom build a platform around your bank account that shows you down to the penny on every transaction where the money's come from and exactly how much you're paying. So you can go, let's say you have you want to make a $500 payment out of your account. And it just so happens we need to take $250 from one invoice and $250 from another invoice. We're going to show you exactly what invoices those come from. And we're going to show you the fees that you paid to access that cash. And it's like you can literally click down into the details to see what you paid and how much exactly when you paid it. Because
Yep.
we felt like there needed to be greater transparency both on the cost of factoring, but also on the fees around the movement of money that often get charged in this space. And so we wanted to build a custom software platform that showed you all the details you wanted.
And I wanted to, like, I was literally working on this Friday and this morning. Like, I have a background in accounting. I'm not practicing that field anymore, but like at least enough of an understanding that I should be able to follow a transaction, right, from my TMS to the bank account Literally couldn't follow it. I'm like, could not go through line by line to see exactly the statuses of what was purchased, what was funded, what was held, which portions were, and which was going to hit the bank account and when. Because even when the disbursements come from the factoring company, and we use one of the three largest factoring companies, like it's a bank, you still can't see it because it'll do disbursements, but it does them in lump sums without remittances. So it's like, hey, we dropped 15 grand in, but you can't trace, to your point, which invoices made up that 15 grand, which portions were held, which were fees, and what does that actually look like on a per load basis? Like literally exporting them into Excel to try to find that. And we still can't find it. Like it's literally what my meeting is after this. So it's like when you're a company that depends on I mean, it's why you go to work is to generate cash to pay your bills, to not be able to see how much of every load you run you actually get to keep is not a small thing. And I think people think and take for granted that that's happening. And it certainly isn't. Not to mention the fact that most TMSs aren't integrated both ways and will feed information to a factoring company one way, but not back the other way. So you can't even see this in your TMS in most cases.
Yeah. So you can export your bank statements directly out of Outgo. But that's why we started this. We did hundreds of interviews with carriers, truckers that were like, and we looked at the back office ecosystem getting paid, and they're like, factoring is just a one-way door that they felt like they didn't have control over. It was a necessary evil to run their business. And we wanted to put more power in their hands and flexibility and control over their finances. And I think that was the premise behind why we started what we did.
Ben, we always say, like, when people ask about factoring, we're like, I've used the phrase necessary evil, the same way that you just did, Marcus. And I always would say, like, factoring is something that you should do until you don't need to do it anymore, right? And I think what the trap a lot of the companies get you in is that, like, hey, you're gonna be required to factor 100% of your invoices through us, so there really is no easy way out of it. Whereas you have, it sounds like, well, I mean, exactly what you just said. You have the ability to choose, if you want to scale it down on how you're gonna use the services, it's gonna reduce your effective rate that you're paying. So
that's right.
Yeah, that's good.
I think the bigger problem is that I think banks just don't serve small trucking businesses. They don't know how to underwrite them, and I think that's created this need for factoring companies, because ultimately what factoring is invoice underwriting. You can look at the history of a business and determine the creditworthiness of them. And I think that's easier to do the more trucks you have, but the same problem exists whether you're running one truck or 40, is that oftentimes a bank won't even collateralize a business against equipment, especially over the market over the last few years as power units are declining in value because we hit peak supply back in 23. So the ability for you to grow your business working with credit from a banking institution is really difficult. And I think what we see is that your invoicing history, whether you're a one truck or 50 truck carrier, you're working on a platform that really understands your business. And that's our goal of providing a financial back office suite to just run a more profitable, efficient company.
Well, and the irony is that, like, small business banking is you have to put your bank accounts with me if you want to borrow money, because I need to see your money coming in and going out, right? But to your point, the problem with the way it's been structured is that, like, they're not built to lend money, like, to small businesses, because they're incredibly hard to underwrite. Like, if you're going to underwrite a small business as a bank, the first question they're asking is, what's your collateral other than this business? Not the truck you're driving, not your office, not your computers. Do you have a house? Do you own another building? And secondly, are you married, and do they have a job? Because I'm underwriting their income and the other collateral to give you the money for this, because I don't know what the business is doing. And your point, and like what I think is cool about Outgo is, like, by tying the bank account to it, you're giving them the benefit of ease of use and transparency, but also, back to you guys, behind the scenes, you have visibility into what the business is doing, the lifeblood. How much is going in, how much is going out, to be able to better service those people too.
Let me ask this too. On the receivables side, is a carrier able to see, like, hey, this broker has is probably one you don't want to work with because of how they've been paying their bills. Like, is there like a credit checking, or even with direct
Yeah.
shippers too? Is there
Yeah,
a
most factoring companies, including us, provide a way to look up a broker to determine sort of their credit worthiness, their days to pay, what they're like to work with, and we work directly with thousands of brokers, just like all these factoring companies. So we know who pays us on time and who doesn't, and so we integrate that data into our platform because obviously carriers want to make a good decision again, and this is I think why the the unification of DAT and Outgo makes so much sense is that DAT provides a blue check mark next to factorable brokers, and carriers can make an instant decision about whether they can factor an invoice with that broker. On Outgo. And so the bottom line is like, we provide that information both in detail via a search interface, but then also directly on a load board for them to decide who they want to take a load from.
Is there a trying to think of a issue I've been dealing with? Hopefully, it's an isolated incident, but we had a slew of double, triple, quadruple brokered loads that we identified, and it's nasty, and like we're trying to figure out who what belongs to who type deal. Is there like a fraud prevention piece to any of this where it'll
Yeah.
help
So
protect
for
somebody?
Outgo, I can talk about what we've built at Outgo, but ultimately, we built an integrated platform that is customer focused. But under the covers, I talked a lot about how it's directly connected to the banking network because we're a fintech. But we've built three risk engines. We have a carrier engine, we have a broker engine, and we have an invoice engine. And those are underwriting brokers and carriers upfront when they join the Outgo platform. And then when a carrier submits a load document, we analyze that load document with our invoicing engine, risk engine, to determine the carrier on the load, the broker on the load, and ensure that it's all legit and healthy in real time. And we have processes to go through and adjudicate and identify common forms of fraud. But net is like we built that into our platform as part of running sort of a
Yeah, I've had
fintech
like
and payments platform.
I've like sadly had conversations over the years with like an owner operator, for example, that he's trying to figure out like, hey, this says you're supposed to pay me, and we're like, well, I have no idea what load that is, and you find out somebody doctored a rate confirmation, and then like on top of it, like the bill of lading, they're not even the carrier that's listed on there, and it's like, we'll try to help you get to the bottom of this, but unfortunately, like it should be a duty of yours to verify that when you're accepting a load that your company's name is listed as the motor carrier on that bill of lading, which is a legal document, right? So
That's right. That's right. And it's
you
really
probably have
hard.
imaging that's like reading that and like catching, doctored documents and things like that.
Yeah, double brokering happens, and we have customers that run into challenges where they didn't properly assess the paperwork and see that the domain is changed and the contact is changed. And we work with them in cases to try to work with the broker to figure out like either hold payment and like also teach to say like, hey, look at that rate. Does that rate look? It looks like
Too good to
it's
be
way
true.
above the market rate
Yeah.
here. You shouldn't like it. If it looks too good to be true, it's probably too good to be true.
Yep.
You need to ask more questions about that rate. And so, yeah, I mean, we have systems that detect doctored paperwork, and so that's part of the process. But also, it starts up front with the carrier looking and like, challenging, is that the right rate for this lane right now? And I think that, again, this is why also like the connection with DAT makes so much sense. Is that if we're linking all these together, you can see there's going to be more opportunity to come of helping carriers make really good decisions about what loads are the best for them, and integrating that into the load life cycle from an AR and payment standpoint.
Yeah, like if RateView is telling you, hey, here's your 50th percentile on this lane, and you're being offered a triple rate, triple that amount. warning. Yeah, that's
Right.
good.
Exactly. Exactly. Like, Spidey sense should go up, but there's so many subtleties like in modification of documents that, it's hard to detect, like a slight character change on a domain. Obviously we've seen, FMCSA, like, contact modification to make it even harder. So, but net is like, yeah, our listen, it's a never ending battle to deal with fraud and in the industry. So but the net is that we've had to do that on the payment side and continue to make investments there.
Yeah. So the you mentioned the blue check mark on DAT. I'm curious, what's next, or what does this mean for everybody with now DAT acquiring Outgo? So what are the changes, or I guess what changements, enhancements, etc. So you mentioned blue check mark. Carriers are going to know right away this is a factorable carrier. What else?
It'll be a factorable load with via
Or
Outgo
load, yeah.
for that broker. And obviously we're just about 7 days in, but I think the bottom line is, like, we want to bring the financial back office suite for carriers to run their business and connect it with the tools, the load board and the marketplace for carriers they're going to make good decisions about what work they do, and they're going to have a software platform that helps them get paid efficiently. And those things are going to work even better together, over the future. I think, day 7, it's about ensuring that there's, tight integration across the two. And I don't necessarily know that we have any immediate announcements to share, like specific, like new features, but you should be able to find work and get paid really efficiently in the marketplace.
So if somebody, if they want to use Outgo and they're an existing DAT user, is it like they're automatically, do they already have an account, or is something they have to
Yeah, so there's
set up, or how does it work?
a website. They just go onto the website and they link and click through to factoring. They can also go directly to outgo.com. And sign up to join the Outgo service. So
Okay.
um,
Cool.
How does that work for a carrier that already has a factoring company? They have like additional steps.
yeah,
How?
so there's it's typically what's required is that you need a buyout, and this is because you're about normally 30 days ahead. You have like a balance of the last 30 days of loads that you've done, and because of the way factoring companies are secured, the new factoring company would work with your old factoring company to buy you out of your loads or your contract, and then migrate you over to the new platform. Every company has a different set of terms of what they allow and when they allow it. So you have to look at the terms of your factoring agreement to understand when you might be in the buyout window. Again, many factoring companies have long-term contracts that they retain you on. Outgo's a little bit different in that we have no long-term contracts, and you can leave whenever you want. I think we have a 15-day or 30-day notice of transition. But when you decide you want to join Outgo from another factoring company, you share with us your factoring agreement, and then we would go through a buyout process with your previous factoring company.
Interesting. Ben, you got any other questions?
I don't. I think this is really pretty cool, and the fact that you guys have that's kind of seamless in the background that allows carriers to work away from their existing factoring company into a new one. That again, I think just keeping it simple. It's like you end up paying less factoring fees if you don't take all the money out all at once, all at the same time. And just at the end of the day, like these numbers add up. Like even like when you see like from the brokerage side, it's like, oh, I'm only paying 1.2%. But that's not annualized. Like annualized, those numbers end up being like 12 to 16%.
You got
right?
it.
And
You
it's like
totally. This is the challenge, is that I think when
it's a
you look
huge
at
number.
the discount fees that are taken out of an invoice, if you annualize that in the terms of APR, it's pretty high APR. It's like, north of often 36 to 60%, depending upon, what the percentage is. And so it can get quite expensive.
And when you think about
And
that, like for every $1,000 you make, right, after you pay all your expenses, you're hoping to keep 200 of it, right? Like, no, you're giving another half of that to a factoring company in some of these instances, to your point. And it's like, if you can reduce that number, right, that's just more money you get to keep that you've already earned instead of sitting in some static setup that was set by a factoring company that everyone just has to do on every invoice all the time, right? Like, you're just not keeping enough of your own money in those scenarios, I feel like.
And here's the other thing about that. I think technology unlocks more value in that carriers and need speed and flexibility and transparency. You need money 24/7, 365. And you want the flexibility to only take what you need because you don't want to overpay for funds. It's like you don't want to take out a loan you don't need
You're borrowing your
and
own
pay
money.
for it. Yeah, yeah. You want to run an efficient business, and I think the technology platform we built really puts the carrier back in control of their finances. And whether it's you just want to factor and run your entire business and take cash flow, or you want to use our software as an AR department. Like we felt like there was total automation capable there in the market, and we want to put more power in the hands of carriers to just run their back office more efficiently.
Yeah, it's like you don't, if you want to go buy a car for, let's say, 25 grand and you're taking an auto loan out, you don't take a $50,000 loan out, and pay interest on that to buy a $25,000 car. It's like, whereas if you're factoring, even if you don't need all the money right away and you're forced to put 100% of it through at your 3 to 5% rate, like, yeah, you're paying fees that you otherwise shouldn't have to pay. And it sounds like Outgo is a great solution to that, with being able to, hey, when there's that month when you've got a big expense and you do want to maximize the amount that you can get access to, you have the ability to do that. But the
That's
other
right.
months when
Yeah,
you don't need it, you can find that happy medium. So it's kind of like, your solution helps companies grow at whatever speed they are growing at, and every company operates individually, right? It's their own story
yeah.
with their own growth trajectory and all that. So that's good. That's a it's an interesting concept. Are you guys like the first? Did you like trailblaze this? Is like, did no
Yeah,
one else
yeah.
ever?
I'm really proud of the team and what we built. We were the first ones to bring fintech. It's called fintech. It's basically connecting a bank account to software and bring it to the freight marketplace for carriers. And so it's we started Outgo just about 4.5 years ago, and saw the opportunity to really bring what I would say is fintech and AI for automation all together in a suite that really gave carriers leverage to run their business more efficiently.
Nice. Well, that's cool. Ben, you got anything else on this?
I
I'm
don't.
excited
I'm
to see
really
how this all like where it can go, because I feel like this is the beginning of what could be a whole, I have like a million ideas in my head of like how you can use similar technology in other applications in our industry. So be
Yeah,
cool to see how
we're
this pans
excited
out.
to. I mean, when I first started talking to Ken was like a couple months ago now. We just talked about the vision of what could be to bring Outgo under the DAT umbrella, and we've got a lot of cool things that we've been talking about where to take it, and look forward to coming back when we have more to share. But we couldn't be more excited about getting the word out about Outgo and um, how to give carriers more control and power over their loads and how they get paid.
Ken, do you have any direct involvement in any of this, or anything to add in that we didn't hit on?
No, I think it's been
Whenever I
fun.
think of you, I'm like, he's the numbers guy. He's like the analytics guru.
Yeah, it's been so about a year and a half ago, I took over corporate development at DAT, right? Roper, our parent company, has been pretty vocal about their interest in getting into kind of a diversified investment approach instead of just buying big platforms every year, taking on 30 to 40% of their capital deployment on bolt-ons, which is what you would call Outgo or Trucker Tools earlier this year. So yeah, I mean, I don't know. I think it's probably more luck than anything, but less than a year and a half in to have two deals hit has been awesome. Um, everything out there is for sale right now. I think it's no mystery to any of your listeners that um, I guarantee that every one of your brokerage listeners have at least one vendor that's in an active process to sell or raise money right now. That's not like a hot take or anything crazy. So it's going to be a very interesting year. I think it'd be really fun to do a corporate development redux at the end of the year on everything that transacted, and where everything landed.
Yeah.
Yeah, there's a ton of potential in this. Where my brain went the first time, and I'm going to be anxious to follow up later this year on how things kind of come to fruition, but it's like you've got visibility now between the load board and the marketplace directly to a bank account. Why that matters is they're federally regulated, meaning like you're going to know your customer knowing where those funds actually went, right? So I think there's a ton of potential to increase trust in the market, increase trust in the marketplace, to be able to verify these things. At the end of the day, everybody wants to just make sure that the people that perform the work get paid, right? And in the middle, there's us, right? There's DAT as the marketplace. We're connecting the people that are needing the work done, shippers, with drivers doing that work. And the more you can verify that the person or individuals that perform the work are the ones that got paid, the more work gets done, the faster things go, the more transactions happen. And I think that's good for the industry
You got it,
writ
Ben.
large.
Yeah, yeah, you summed
Spot
up the
on.
entire thing. It's like Ben GPT.
Yeah. Yeah.
I'll say, right, like it's not just going to be who's buying and selling. I think like the consolidation play, all of the swirl that happened during COVID, all of the advancement. Right? Remember, pre-COVID, paper bill of ladings and PODs and everything was still by far the more common
Paper
approach to
com
this.
checks, like,
Yeah,
oh,
I remember. Yeah, you go drop your com checks. We used to mail them to ourselves at FedEx. We'd go out back, drop them in um, a T-check box, whatever those things were called, the yellow envelopes, whatever they
mhm.
were, and then mail them back for consolidated billing. And so I think like what's going to happen is you're going to start to see these players. And for us, it's about end-to-end visibility, the data exhaust that comes off these businesses, but also just making things really easy for our customers, right? Like we're only ever going to invest in things where we feel we have a very high established relationship. Internally we call that like a right to win. And so like with visibility, it just made a ton of sense with trucker tools, right? Our customers are on our platform every day, millions of loads getting posted, looking up rates. Sure, you want to see where your truck is, and you get an industry leading solution to do that. Well, we have 100,000 carriers, almost 1.5 million trucks in our network. Of course they want to help, their working capital. It only makes total sense. So I'm very bullish on where we're positioned. I think you're seeing a lot of other players out there try to make some sense of it, right? I think earlier this year you saw like a publicly traded bank buy a freight analytics startup, which is, I think, a little bit of a different approach. So I think like you're going to start to see these moves start to coalesce. The cart just bought 3GTMS, and they bought My Carrier Portal a little less than a year ago. So I think you're going to start to see a lot of these moves um, come together over the next 12 to 18 months.
Yeah. And even
But
just
Ben,
the
to
two
your
you mentioned. I was just going to say, like, okay, I booked a load through the marketplace. Can I see that the truck I booked picked up my load? And can I make sure the truck that I saw that picked up my load is the one that I paid? Right? Like, just
yes,
very simply speaking, like those three things together create so much value. Just
that's
them
right.
being under one roof.
Yeah, I think we talked about a bank account. You open a bank account, you go through what's called a KYB process, know your business, where we thoroughly vet all the carriers we work with to ensure we've identified the entity and the key operators associated with that entity. And so um, it's a key piece of Outgo in our onboarding process. But what you talk about settlement from a marketplace standpoint is it's like transacting on eBay or transacting
Yeah.
on Amazon. You know that both sides of that marketplace, are good for the good payment can happen and be
Yep.
transacted efficiently.
Is there
Yeah.
anything like, because Ben and I sit in the broker seat, like, is there anything that we will see an impact on from like day one? Like, do we know, like, hey, this carrier this truck I just saw on a truck search, like, they're, verified through your service, or is that not, is that anything, is there any, I guess, immediate impact to brokers or
No,
change for brokers or experience wise, or?
no news today. I mean, I think we're bringing Outgo under the DAT portfolio, and uh, no specific new features or
There's definitely a
announcements.
ton
I
of
think
potential, though. I think
the
that's what I'm
biggest
Yeah.
excited for.
the
Yeah.
biggest one is like already, go, any load with that blue check mark means it's factorable on Outgo. Any carrier customer can go apply for, Outgo under the DAT factoring brand or direct at outgo.com. And that will continue to bring the marketplace side together with the payments and factoring side of the business. And, I think that, we're excited about what this means for brokers long term too. And certainly would love to come back and talk more about that once we're ready.
Yeah,
Well, that
just to
one you
jump
just
in,
said
right?
was
Like,
huge,
so,
by the
oh,
way. Like the blue check mark from the carrier point of view, right? Like if I can see that load that I want to run is factorable, like there's already trust there that
I'm
I
looking
didn't
at it
have
right now.
before.
Yeah, it's like, hey, these guys have a blue check mark. That one doesn't. So yeah, if I'm a carrier, it's the same way as like when you would see credit score days to pay. Like it's one more thing that's going to give a carrier like or I guess
Reassurance. They're
yeah,
going to
like
get paid
gives
for it.
them data to make a decision based off
Yeah,
of.
and here's the
So
other thing is
information.
that, getting the best loads means acting fast, right? And getting in touch with the broker. And when you see that, you can know with confidence that you're going to be able to get paid if you negotiate that load and land it. And like it removes a step and simplifies the process of just finding work, getting paid. And I think that's what a carrier cares about. They
Yeah.
yeah, I think just to kind of land this all, I think it might seem like we've got like a lot of not yets. I'll just give you two interesting bits of context because Marcus is a pretty modest guy. We broke Outgo's, the collective new company, broke Outgo's single day application record 30 minutes into announcing the acquisition. We announced it at 4:30 on like a Thursday. We,
That's
we broke the
awesome.
monthly record, Marcus, by the end of that calendar day, correct?
That's right. That's right.
Wow.
Yeah.
So,
Yeah.
so these guys are like training. I'm going to probably be processing lead forms by the end of the month. The whole executive team is going to be sitting there processing. So, like that's part one of it. Part two, this has been a really great experience. So, my job is out there. You got to find these deals right before you can even start working on whether they make sense. And so, Marcus and I started talking probably 9 months ago, and it's like, wow, this is really really cool. But amongst everything else, it's like then we touched back in again. It's like, oh, this is really really cool. And then Marcus met with my team at Manifest, and it all came together. I won't. I don't think I'll ever forget when it came together because it was the weekend of my son's 10th birthday. Because I remember being at his birthday party, singing "Happy Birthday" and trying to exchange emails back and forth to get the deal moving. So what, Marcus? It was like not even 7 weeks from when we
It
decided to
was
do the deal to
fast.
closing it.
It was incredibly
Um,
fast. Yeah.
yeah.
I
So
met
we've been
with
hustling.
you, and then, Jeff, and it was like lightning fast.
Yeah. That's our advantage, right? That's Roper is our superpower, our parent company. They do deals all day, every day. They do things fast. But the reason, like, we've got tons of ideas around data exhaust. Like, imagine like verifying a carrier that's factored more than 5 or 10 times. That carrier's not fraudulent, at least not like systemically fraudulent. So it's just I can't wait to get access to their database so I can start playing with the data. But they slapped my hand 3 times already in the last week. So we'll get there. It's just like let's get everyone laptops and employee credentials and make sure they have insurance
Yeah.
before we go too crazy.
First things first. Yeah.
First
No,
thing
that's
is
awesome,
first.
man. Well,
And then go to the next one. Go to the
congrats to
next
both
deal.
of you on making the deal happen. That's huge.
Thank you.
Awesome. Well, we'll definitely leave a link for Outgo in the description or the podcast show notes. So if you guys alongside our normal DAT link that's there. So if you need access to the greatest marketplace in brokerage and trucking, the DAT link is there, and now Outgo will have a link in this episode as well. So make sure you guys check it out, sign up, and can't wait to be talking later this year with you, Ken, and see what the year in review has looked like and how everything's all panned out. So appreciate you both joining us today. Marcus, did you have anything you wanted to wrap up with, or
No, just come check us out. We're at dat.com/factoring or outgo.com. Feedback always welcome. Love to engage. If you're a carrier, want to reach out. Love to have a conversation. So
awesome. Ken, you got anything?
No, still reveling in that national championship. I think 10-2 is probably the prediction for this year with a win in Ann Arbor. But
Always.
trying to get out there and play some golf in my parka in May. I got out and played a little golf. I got more windburn than sunburn, so maybe we'll get a couple months of summer as you suggested this year.
Awesome. Well, always good having you on. Ben, any final thoughts?
Whether you believe you can or believe you can't, you're right.
And until next time, go Bills. That wraps up this episode of Freight 360. Check out the show notes for links to anything that we've referenced on this episode. And make sure to visit us online at freight360.net to see our entire library of episodes, videos, blogs, and more.
And make sure to check us out on Facebook and subscribe to our YouTube channel for daily and weekly tips and content. And if you'd like your question answered on the show, fill out the Contact Us form on our site, and we'll see you next week.